To Buy Now, Sell Now on ET Now, and this is the show where we get you all the queries answered by our experts and all the queries that you send to us. I'm Shriti Sharma and with me is Ankita Saxena, and over the course of next 1 hour, we're going to be connecting with our experts as well. But before we start taking your queries onto the show, is the big day with respect to the election verdict of BNC in Mumbai specifically. And it looks like a clean sweep for the Mahayuti as counting of votes begin for Mumbai's high-stakes BNC elections with 1,700 candidates that are definitely fighting for 227 votes. Early trends indicate that BJP-led Mahayuti leading with 69 seats, followed by Shiv Sena MNS at 42 and Congress at 11. Anurag Joshi joins in with the mood check. Anurag.
The counting for the BMC civic polls started at 10 a.m. and according to the early leads, and this is for about 130 seats, the BJP-led Mahayuti alliance that also includes the Shiv Sena and also the RPI Athavle party is more than halfway mark of that number. So they're around 69 currently, and that compares to 42 for the Shiv Sena UBT and also the Maharashtra Navnirman Sena. The Congress is currently around 11 or 12 seats. At this particular counting center at De Silva High School in Dadar, the counting has started for the postal ballots. So the leads right now and the EVM counting will be taken up a little later. So right now, the trends are mostly for the postal ballots, and slowly the EVM counting will be taken up. 2,300 government workers are currently engaged in the counting work. They're helping with that. And this is the Mumbai civic polls was part of the Maharashtra municipality polls, and 29 municipalities, including BMC, went to polls, and this is the richest municipality, not just in India, but also in Asia.
All right, Anurag, thank you so much for joining us. Clearly, according to the mood track right now on top of your screens, BJP is clearly leading with 69 seats and Shiv Sena is at 42, Congress on 11. We will be coming out with the results anytime soon, and we will get you all the updates on that. But let's get going with the show, but let's take a quick mood, how the market mood is shaping up at this juncture. Well, we have recovered very smartly from the day's lows. In fact, we are up almost 150 points from the Nifty from the day's lows. We're trading with gains of more than 0.5% on Nifty. In fact, Sensex is trading up almost 590 points, 0.7% gains coming in on Sensex. And Nifty Bank has also recovered very smartly. We're trading 461 points up, recovering 500 points from the day's lows on Nifty Bank as well. Sectorally, Nifty IT is in focus. In fact, we did see Infosys that posted a strong set of numbers. On the back of that, it's trading up 5%. Emphasis, LTI Mindtree, Tech M, Wipro, all of them trading with gains of 3+%. So Nifty IT is in focus on the back of that. And now remember, even on Wall Street, all the chip stocks, AI-related companies have been, rallying on the back of renewed enthusiasm. And the IT stocks back home are also rallying on that buoyant sentiment. But let's get going with the show and get our guests on board. Kunal Bothra is joining us on the technicals, and Lancelot D'Cunha, Chief Investment Officer of ValueX Wealth Connect, are joining us now. Hi, good morning to both of you, and thank you so much for joining us today. Let's get started with all the questions. The first question that is coming in from Raghavendra Rao, Hyderabad. He says he's a senior citizen. He wants your advice on ICICI AMC. For purchase at current market price, and he's a long-term investor. Lancelot, let me come to you for this one. ICICI Prudential, what is your view for the next 1 year?
So, while the business has been growing and we are seeing good business growth expected even for the next 1 year, I think valuations are a little bit on the higher side. The stock trades at almost 50 times earnings. And even if you consider it as on a price to book basis, it's, trading almost 6 to 7 times price to book. So, given that, valuations are a little high, yes, this is a good company to have in your portfolio. The question is what is the risk reward ratio? And at this point in time, the risks are a lot higher than the returns that can be expected. So one should wait for some correction and then accumulate the stock for the portfolio.
So that's the take coming in on ICICI Pru. But let me move on to the next query then. And this one is coming in. This one is actually coming in for you specifically, Lancelot, because Bala from Chennai has written to us and he wants some of your top bets when it comes to the auto ancillary space. He wants to keep them for the next couple of years. Any of your favorites when it comes to the auto ancillary space?
So I think, Minda Industries is one company that is seeing significant growth and while the stock has also run up, it still is attractive as far as the auto ancillary space is concerned. And I think the other company that one can look at, while it looks a little bit expensive as yet, is the SKF. They have demerged their businesses into the auto business and the industrial business. So the auto business, the share price has not moved much since the demerger, and hence one can look at accumulating that as well.
All right, let's move on to the next question then. The next question is coming in from Silva, who's writing in from Chennai. Silva says that he wants a long-term view on CAMS. He's bought it at an average buying price of 760 rupees. Long-term view, 2 years is the holding period for CAMS. Lancelot, what's your view on CAMS? Now, if you look at CAMS now, it has been in a corrective phase for a while now. Going ahead, what do you see?
So I think you see going ahead, CAMS controls almost 17% of all the demat accounts and the business is growing, while the pace at which demat accounts have been added in the last year has dropped. There is still a large runway for people to get into the capital market space, and CAMS being one of the major registrars and share transfer agents will be benefited from this entire space. However, valuations are a little bit on the higher side. It trades at 40 times earnings and almost 15 times price to book. Profit growth has been, a little muted. It's been about 10% year on year, and sales growth is about 15%. So I think if he's bought it at 760, he should continue to hold, and maybe if there is any price correction, you can always accumulate the stock by adding to your positions when the price corrects.
All right, that's the take coming in on CAMS. But Kunal, let me come to you for the next query. And this one is specifically coming in from Murli. Wants a view on CSB Bank holding 144 shares at a price of 550 rupees. He needs a 1 month view here.
From the 1 month perspective, I think at current levels, I would suggest a hold. Maybe if the stock drops down to sub 500 mark, that's a good point where you may consider to average out, because it looks like that 500 to 550 thereabouts is a range for CSB Bank. So if you can maybe take advantage at the lower end of the price trends, try to bring your average cost price down, then it makes a lot of sense for you to probably get an exit around the 525 to 530 levels.
All right, so that's the view on CSB on the charts. Let's move on to the next question. This is K. Guru, who's writing from Chennai. He says he wants to add NMDC and NALCO for a period of 2 years. What's the future outlook? Lancelot, coming to you, future outlook for NMDC and NALCO?
So I think as far as NMDC is concerned, the future outlook is very strong. But, as I said, the stock seems to have also run up in terms of valuations. And as far as NALCO is concerned, yes, definitely, given that strong commodity prices and you are seeing an increased, industrial demand for aluminum and copper products, I think you can look at both these stocks for accumulation, but one needs to wait a little bit for any price correction. That would be an opportunity to add to the portfolio.
All right, that's the take coming in on select metal counters. But Kunal, let me come to you for the next query. This one is on Fortis Healthcare. This query is specifically coming in for you with respect to Fortis. Mohit from Ludhiana holding 350 shares at a price of 270 rupees. He wants a 2-year view coming in for Fortis.
See, I think the stock has done very well for itself over the last 4 to 5 years, from a point where the stock was almost at 150 to rallying up to 1100 just about till start of or mid of 2025. I think now the stock would be into a corrective phase. So since you've purchased at far lower levels, I think maybe closer to 950,000 is a good point if the stock rallies up into, I think it's a good point where you can look to start booking out profits, at least 50% profits at the 952,000 odd mark. And in case of the stock rallies a bit higher and comes closer to the 1100 mark, that's a good point where you can consider booking out full profits.
All right, with that, it's time for a quick breather, viewers. Don't go anywhere. We'll be right back. Getting all
One is coming in from Shiva Reddy from Andhra Pradesh. He's holding shares of Reliance, 215 in quantity. And Lancelot, what is your own take on Reliance Industries? Of course, the results are due, but Shiva has been holding the stock at 1,239 rupees. What's your sense? Good time to book out profits, buy more, or what to do next?
So I think you should continue to hold the investment, and if it does correct, then you can buy more, because one is with the crude prices, global crude prices, falling or stabilizing at lower levels, there will be an advantage in terms of the refining margins for Reliance Industries. Apart from that, there is also the outlook that at some point in time, the Reliance Industries will demerge its consumer division under Geo Consumer, and that will be up for listing. So that will enable some unlocking of value from the stock, which will give you a good upside as well. So I think you should continue to hold, and whenever there's an opportunity, you should probably add some more stocks at lower levels.
All right, moving on then to the next question. This is coming from Hyderabad. Okay, he says he's a great fan of ET Now. He says that he's a regular watcher of the program. Thank you so much for watching our show. He wants a technical advice on two shares. One is TCS. He's bought it at a buying price of 3,990, and Tech Mahindra at a buying price of 1,710. What is the price? What price can I average in more quantity? Kunal, both Tech M and the first one was TCS. Should he be averaging in at this point, or what's your view on the IT pack?
So I'm bullish on the IT pack overall, and if you're looking to average both of these names, then I think for Tech Mahindra, I would suggest that in case of the stock comes closer to 1575 pivot, that's a good point where you can look to average. That seems to be a point where the stock has taken a recent support, as well as potentially could also coincide with the 50-day moving average for Tech Mahindra. TCS, on the other hand, even though the stock is trading right now below the 200-day moving average, but I think closer to 3,200, which is at current price itself, the stock could be a good point where you can look to average out. Don't see any major fall into the stock price in the near term, even though it's showing a trading or the technical picture below the 200 DMA. But I think on the higher side, you might probably expect the stock to come back towards 3,300 to 3,400 kind of a zone in the near term. So for TechM, 1575, and for TCS at current levels of 3,200, you can average.
All right, that's the day coming in on the IT counters. But the next query that I have is coming in on MRPL. Kunal, what are your thoughts on the same, wherein Murli from Andhra Pradesh holding 1,700 shares, buy price is 160 rupees. He wants a 1 month view here. What to do, hold or sell?
See, you can hold on to the stock price. What happened was on Wednesday, the stock moved up higher by I think 8% or so, on the back of the results, etc. Today, the stock opened up on a slightly flattish note, but then I think it's gone through some bit of profit booking. So what happens is eventually after the next 2-3 days, once the stock price settles, we look at 150 thereabouts is a good pivot for MRPL. And on the higher side, you might expect that the stock may come back into retesting of the 160, 165 kind of a resistance. So if it's a very short-term specific query, I would suggest a hold for MRPL.
Whole call coming in as far as MRPL is concerned. But let's move on to the next question. Kunal, again, this one's for you specifically. This is Sri who's writing from Bangalore. Sri says that she holds a BEL at a buying price of 400, wants to know if he should book profit or wait for a better price. 1 to 2 month target is what he's looking at on BEL.
See, I think if you're looking at this as a 1 to 2 month, I think 430-ish could be a good point where you can consider booking out profits. I think just about last week or so, the stock had come back towards 424, 425 kind of a mark. So I think if that's the kind of a time frame you're looking at, 1 to 2 months, you might expect the stock may come back into breakout that 425 mark, maybe move up another couple of percentage points. So I think 430 and above is a better zone if you're looking to book profits for BEL.
All right, that's the take coming in on BEL. But Lancelot, the next query that I have is coming in from Nikhil Sharma from Mumbai. He wants a view on Axis Bank. He's been holding the stock at close to 1,284 rupees. How do you see the stock at these levels and the outlook going ahead?
Outlook for Axis Bank as well as a lot of the other banks has been positive because we have been seeing RBI lower, interest rates and then accordingly yields have also come off. Plus the pressure on deposit mobilization for banks has eased up and a lot of liquidity is available with the banks. So if you look at Axis Bank, it's trading at around 2 times book value, which is a fair valuation for Axis Bank. And given that the outlook is going to be positive, and we should see improved growth going ahead. I think it may be a good idea you can look at adding to your position of Axis Bank or even holding onto your stocks.
All right, so that's the view coming in Axis Bank, but let's move on. This is Partha Saradhi, who's writing from Hyderabad. He says he needs advice on Ather Energy. He's bought at a buying price of 609. He's not given a time horizon, but let me get a one-year view. Lancelot, on Ather Energy, he's already very marginal profit is what he's sitting at, but what should he do right now?
So I think, if you look at Ather Energy, it is one of the leaders in the mobility, the two-wheeler mobility space. Market cap is about 25,000 crores. And at the moment, the company is still not generating, profits at the net profit level. While it is EBITDA positive and we have seen an increased trend in terms of, the move from combustion engines to electric vehicles, that trend is positive and it will play out over a longer period of time. But given that the company is still not making profits, I think the valuation is a little bit on the higher side at this point in time. So maybe one should wait for any kind of correction and then use the correction as an opportunity to add, because the long-term growth story definitely is positive for the company.
All right, that's the take coming in on Ather Energy. But with this, it's time now to slip into a very short break.
Marcel, now before we get all your questions answered, let's get going with what's happening in the markets. Well, we are in the thick of earnings seasons, and we do have Smartworks that has come out with its numbers, and we have the management also joining in. It's a good Q3 earnings that we see coming in from Smartworks. In fact, robust margins, and we do see. We will be joined by the management to give us guidance on the growth roadmap ahead. Harsh Binani, who's the co-founder and ED of Smartworks, is now joining us. Hi, Mr. Binani. Thank you so much for joining us. Well, your profit has turned positive, after a loss of for the several quarters in this growth momentum. Is this growth momentum sustainable? What is the outlook for the remaining FY26 and the full year of FY25?
Good morning and wishing all the viewers a very happy new year. It's a very important and clear inflection point for Smartworks, the Q3 results that we've just announced. This was our strongest quarter to date, where growth, margins, cash flows, and returns have all converged together, which clearly indicates to you that Smartworks is now structurally entering into a compounding phase. As you would have seen that the headline numbers are very strong. Our revenue grew by more than 34% year on year, with double-digit growths quarter on quarter. Our EBITDA reached an all-time high of 85 crores. And particularly what's most interesting about our results this quarter is how our OCF to EBITDA, our cash flows has again gone back to greater than 1, clearly indicating the strong cash flow nature of our business. What has been driving the results is largely our large enterprise demand, where more than 90% of our revenue comes from large enterprises, which includes global MNCs, large listed companies, and Indian conglomerates. So we are seeing a very strong growth outlook ahead. Our FY27 and 28 supply is already locked in, and particularly with a lot of influx of GCCs and multi-city expansions that we are seeing from our clients, we expect a very robust quarter ahead with expanding margins. And most importantly, our return on capital employed has also seen a jump by more than 800 bips, growing from 14% to more than 21%. Lastly, to your question around us turning Ind AS profitable. So let me just clarify that the company has been profitable for the last 4 years and we've also paid income tax. The good news now is that Ind AS, basis which we are accounted, where the interest cost and the finance costs, which are largely non-cash in nature, more accounting, they are converging now to our actual profitability, indicating that the scale economics is now finally catching up, and it's a good milestone for us. However, having said that, we've always been profitable and cash flow accretive.
Well, yes, that's with respect to the accounting standards that we wanted to know a bit more on that. But Mr. Binani, the IT clients now contribute to 38% of your revenue. What's your plan to diversify this going ahead? And which segments are you finding good demand momentum picking up right now?
Sure. Over the last 3 years, progressively our non-IT base, which particularly includes manufacturing, logistics, healthcare, and BFSI, has been taking a large growing share of our client pool. IT/ITS continues to remain very robust. What has been largely also driving a lot of incremental demand in the last 2 years is GCCs. So as we continue to scale up and grow, we expect that GCCs and a lot of non-ITS sectors are going to be driving a lot of demand. And particularly what also makes this de-risked for us is that not only is our client pool diversified across sectors, but our overall portfolio concentration risk has also been coming down in spite of the fact that our deal sizes are continuing to go up, which indicates to you that the multi-city farming engine which we have developed continues to operate in a very robust fashion. And at this point, we are extremely excited about the large opportunities that we are continuing to see with GCCs and the diversification that we've done. Our positioning has been very clear that we are a pan-India infrastructure partner, and therefore, when you look at our metrics around multi-city revenue, 30% of our revenue actually comes from multi-city revenue clients.
Right. Harsh, also tell us how much capex have you utilized for 9th month FY26, and what is the capex outlooks for FY26 and FY27 as well?
Certainly. Our balance sheet strength has continued to go even further up in the last 9 months since we've done the IPO. And we are starting to see the benefits both on the demand side and the supply side, where the flywheel is starting to take off meaningfully. During the IPO and the last 2 quarters, we've been always indicating that our business is a cash flow focused business. And we are now entering a compounding phase where our entire capex is going to be self-funded. We are yet to utilize all the capital that had been raised during IPO, because the prior investment that we had done before IPO, which is just 500 crores, continues to generate very healthy cash flows. And the new deployment which we have done post IPO is now starting to enter into maturity phase. So far in the 9 months, we've done close to about 200 crore plus of capex. Going forward in the next 2 years, we've guided that we'll be adding about 2.5 to 3 million square foot every year, which will largely overlay with about 350 crores to 400 crores, both of which will be financed completely internally, and we will not require any other external capital to maintain the 30% growth plus that we are forecasting.
All right, we look forward to that. But with this, Mr. Binani, we'll let you go. So good having you on the channel today. Thank you so much for our time, and all the very best for the upcoming earnings.
Thank you so much.
All right, so that was the management of Smartworks talking to us about the company, that the reported numbers, how they have been looking like, and going ahead, what's the outlook. GCC is something that has been showing very strong traction when it comes to Smartworks, and the stock is also seeing on the recovery mode. But with this, viewers, it's time now to slip into a very short break. Don't go anywhere. We
get going with all the questions that you have been writing in to us. This one's coming from Venkat Rao, who's a long-term investor from Visakhapatnam. He's a great fan of Kunal, and he wants technical advice on 2 shares. Suzlon, he's bought at a buying price of 76 rupees. He's sitting at a huge loss right now. He wants to know, should he be averaging in at this point? Kunal, Suzlon, he's sitting at a huge loss. What should he do?
Thank you so much for that. So I think for Suzlon, if you're a long-term investor, only then it makes sense to hold on to the stock and average at current levels. The only good part about the stock is that after over the last 2 years, specifically 1.5 odd year from 2024 highs of 80, 82 plus, the stock has shown correction of almost 30%. at current juncture of sub 50 levels where it's trading right now. And also, I think it's come back towards a major support from where in early 2025 you'd seen a bounce back happening for Suzlon. So purely in terms of price, it makes sense to hold on to the stock at current levels and maybe look to average out if your time horizon is long term. So what matters over here is at least a time horizon which could be 12 to 18 months for this investment. If you are okay with that, then it makes sense to average the stock at current levels.
All right, that's about Suzlon Energy. But Lancelot, the next query that I have is coming in from Ashok Kumar from Tirupur. He wants an advice on Ereda, holding 332 shares at an average price of 33 rupees. Can he hold it or sell right now?
So I think since he's bought it at 33, currently it's trading at about 138. And if you look at the benefits of this company going forward, there is a thrust of the government on increasing renewable energy usage as well as installed capacity for renewable energy. So there is going to be a good growth in the demand for loans and facilities for renewable energy. And given that this company is trading at about 20 times its earnings, and even if you look at it from a price to book, it's about 3 times, and it's not very heavily leveraged. So I think one can look at maybe adding the stock even if you want to add, but continue to hold your existing investment.
All right, so that's the word coming in on Arida. Let's move on to the next question. This is coming from Shiva. He says he's from Bangalore and a long-term investor. He wants a suggestion on Dixon Tech. He's bought it 10 shares at a buying price of 16,100. He wants to know what's your view. Should he hold on to it, Lancelot? There are a lot of queries that keep coming in for Dixon because valuations have always been a concern on this particular company, even though fundamentally it's a strong stock. So what would you suggest?
So I think even after this correction from whatever 16,000 to 10,000 levels, the stock is still trading at about 50 times its earnings. While earnings are expected to grow and there will be good demand going forward, for this company. In the short term, there could be some hiccups because of all the pressures, that we are seeing in terms of tariffs and in terms of other, trade-related issues or geopolitical issues that could create a short-term disruption in their production as well as sales. So given that background, from a risk to reward ratio, it still is a little bit risky and compared to the potential upside in the near future. So it's better to wait, whatever you're holding, you can wait for maybe a further correction, and then you can average out at much lower values when the pricing becomes reasonable, because over the longer term, this will give you this company will continue to grow and generate higher profits going forward.
All right, that's about Dixon Tech. But Kunal, this query is coming in from Sunil. He says he's a fan of yours, currently holding 500 shares of Patel Engineering, but his buy price is 103 rupees. What should he do? Is this stock worth averaging at current levels? Because he wants a very long-term view, almost a 5 years view for Patel Engineering. But in my experience, I think that the stock is also very volatile, and so is the kind of fundamentals that the company has been posting. But what are your thoughts?
Yeah, absolutely. So, the stock has gone through a major correction, not just in the last 1.5 odd year, because that's the case with many of the mid caps and small caps, but then over the last, I think, 10 odd years or more for Patel Engineering. The stock was in its prime in 2007-8, kind of a point where the stock was at 750 at current in price adjusted levels. And then from there, the stock has been consistently going to a corrective phase. So the long-term charts for the stock is not attractive. I would suggest to just hold on to the investments. I understand that I think that the stock is showing signs of a bounce back today. There's good recovery for the stock in the last 2 days from the lows of 25, 26, which it had hit. Maybe in that sense, you might expect some bit of more recovery. But then I think really, if you want to look at long-term investments, there are far better stocks which you can consider, putting your money in, where the probability, is a lot more on the higher side for these stocks to kind of recover. So just hold on to your investments over here for Patel Engineering. No need to average.
All right, on that note, Kunal and Lancelot, thank you so much for taking the time out and taking all the questions for us. We'll let you go on that note. That was the last talk of the day, viewers.